Hi guys, welcome back. So on Monday night, I posted a video and I mentioned that I would expect BNGO to have a big correction. You might be wondering if you're holding it, if you should take profit or cut loss. And if you don't have it yet, should you buy the dip right now? Is it a good opportunity? So let's discuss about this today. So ever since the first breakout on last Tuesday, every day it's been almost a week that we have been hearing only about good news, how it's a very big breakthrough, it's revolutionary. And these few days, all we hear is something negative. Or maybe if it's not negative, it's confusion. It's just so confusing because um, people are all comparing the PACB with BNGO, and no one is medical expert here. So 99% of us just got really confused. What are they talking about? They're just talking about medical language. Can't someone just be specific on telling us which one is better? Now look at this. 1, 2, 3, 4. 4 big days of increase. And then look at this. 1, 2, 3, 4. It was the same time period. 4 days of dropping. It's the same here. 1, 2, 3, 4. Okay. And versus when it dropped, the 3 days, and then look at this. 1, 2, 3. Okay. 1, 2, 3. This. 1, 2, 3. So it's almost like the market want us to believe that it's either BNGO or the rest of the group. Are they really competing with each other? So I'm not a doctor, I'm not in any kind of medical background. I'm not pretending that I understand anything out of their research. But I'm going to use my own perspective to try to understand this industry and these companies and their relationship together. So if I understand it correctly, the BNGO and the PACB, they are kind of completing each other. So we know that BNGO can do the DNA mapping in a cheaper cost, and PACB can do it DNA sequencing with a higher cost. But it's really different use. It would be more like you can first do the BNGO, and then for deeper analysis, you can do PACB. So if you can screen something out in the first degree with the DNA mapping, then you can know where you can focus on, which area you can focus on to find out more detail about it. So that's where the PACB comes along. So they're not so much competing with each other, but more like completing each other. I think right now a lot of people are focusing too much on the technical aspect to compare the detail of the two companies and tend to forget that the second big breakthrough of BNGO is really the cost of DNA mapping. It reduced the cost significantly, and I think this is very important to open a lot more application. So I'm really not trying to go technical here. I'm really thinking about beyond the diagnosis industry right now. Now, I'm not 100% sure, but I think that right now the genomic test does need the doctor to prescribe it first, and then it can be covered by health insurance. So the doctor would not prescribe it, out of nothing. Um, and if you want to do it on your own, it's still quite expensive. Depends, it could be up to several thousand dollars. And it really depends on how global you want to have this analysis. So that's why I think if the price is a few $100s, or it could be lower in the future, it will open up more opportunities to expand more applications from direct to clinic to direct to consumer. I think price is definitely a big important factor to increase the accessibility. So let's say you want to have babies. You or your spouse might have someone in your family that have some kind of disease and you feel a bit worried, but you and your spouse are perfectly fine, normal, healthy. So most likely your doctor would not give you a prescription to do any genetic testing. And the test can cost anywhere from $300 to $3,500. And they're usually covered by insurance if you have prescription from the doctor. And if this $500 can put your mind at ease for your children, I think a lot of people will be willing to pay for it. And on top of it, maybe even insurance company would put it as a requirement for insurance purchase. The insurance company doesn't have to even cover it all. It could be split 50-50, each pay half and then each party is happy. Even the conservative thesis would be just staying with the diagnosis and completing what PACB could do. It's still okay. It's still not bad, because right now DNA industry it's really at the early baby stage. There is a lot more room to grow, a lot more demand coming, a lot more use. So it has a lot more room to allow this kind of new player to come into the picture. So I don't think it's either this or that. Like, I don't think PACB is gonna kill BioNano. I don't think so. I think this industry need to grow bigger to allow a lot more biotech companies to come into the market and compete with each other's technology and make each other improve faster and be more competitive. I think it's gonna need more new players. And right now, BNGO did have a technology breakthrough, and it did make the cost much lower than the industry level. And it did change the business model from selling machine to selling service, which is a subscription basis. And it's going to increase a lot more stickiness to the clients. And it's going to have a constant stream of revenue coming, which is very good for the company. So it does justify the price to jump. But does it justify such a big jump? Let's talk about the technical analysis here. So a lot of people are too afraid to go big on these 2 days. And then here, maybe someone cannot take it and open a small position. And then boom, on Monday, you see that jumping so high. I think some people may increase their position because it just seemed like a pattern. It go up every day, after hour and pre-market. It seemed like a pattern. So this is when it happened. The crash, because people got greedy, and then they increased their position. Because at first they thought it's a penny stock, they should not have such a big position. But with such a small position and so much gain, then it's very easy to get greedy here. You see, I think this candlestick, it's a lot driven by FOMO. Push it all high. I think there are some institution investors that bought in on these few days. Their cost is very low, so they can always take profit. It has already maybe 6 times, 7 times, or 8 times for them. So they have more than enough profit to go away, because there were just so much hype driven by retail investors here. So it's not very healthy, and it makes the stock very fragile because this is an area that people are not familiar with. Most people cannot understand the small technicality between the technologies. So it's very hard to differentiate the core value of the product. And look at the QuantumScape. It's the same thing. When it's so technical, any expert comes out of some kind of a source or a website, publish something, and say that the technology is not that good after all, well, most people would panic, because they don't know. It's not like Tesla, not like NIO, that people can see the car, they can feel the car, they know the quality, they know the word of mouth. It's completely different than a B2C business, because this is B2B, and it's a lot of people are not the consumer of it. They don't have such. There's a reason why Warren Buffett say that he only invests in the companies that he is familiar with, because he is the consumer himself of this brand, of this company. So this is why companies like QuantumScape and BioNano, it's very easy to scare people away, because as retail investors, we don't have the expert knowledge backing us up to have faith in this stock. So it's very easy, very fragile, very easy to make mistake. That's why it's dangerous to be driven up so high by FOMO. It's very easy to be broken. And we are lucky that short sellers cannot short the stock, because if they can, then you would expect something like QuantumScape on Monday. It would dip a huge dip. So right now, what's next? First of all, I'm happy that we kind of squeeze some foam out, because if the price is so high, then how do we expect more institutions to buy in? Because institutions are not like retail investor. They can just buy a stock anytime they want, because this kind of biotech company, they need to do more research on it. They need to wait for some more academic report. They need to wait and see the FDA approval, etc. They need to do a lot of research. It's not like us that we can buy anytime we want. There are a lot of institutions looking at BioNano right now, and they are looking very closely with what's going to publish, for example, in January, and waiting for the FDA approval and so on. And they're going to keep looking at it, and they're going to evaluate this company from here on. So if I were an institution investor, what would I do? First of all, I cannot short the stock. So what can I do is I can buy in here, make it have a big jump and look like it's gonna keep going on the day, and a lot of retail investor would jump in and push it even higher, and then I sell it here, and then I buy it back here, and then I sell it again here, and then it would make it go down more, and maybe by the time the 10 days moving average go up and the stock price would touch the 10-day moving average, go back up. That's my own assumption. So I assume if I want to invest in this company, I would try to scare away a lot of people and shake off the weekend hands first before I pull it up. Assuming the result is good coming in January, and we will have more news, more good news, more good catalysts coming. So what am I going to do? Right now, I have 6,000 shares with the price of 1.3 and 2. So I'm going to keep looking at it. As long as it stays above the 10-day moving average, I'm going to still hold it. And if it drops below the 10-day moving average, I might take half of the share out, or just take out my original position and let the profit run. If we look at the volume, you can see that this 3 days volume is much less than the previous days of increase. So if we but we need to watch out. If it gets below the 5-day moving average, it has the momentum to keep going down and do a consolidation. In the end, I would like to remind you that this is a high risk investment, because there is always the risk of some new player, someone that comes out of nowhere and saying that someone is revolutionizing this industry all over again, and all the money would chase those new companies. That's gonna be the rising star. These kind of technology revolves very fast, so we always need to watch out, be careful, and know that there is always a risk like this. Make sure it doesn't take a big chunk of your portfolio, so you're not driven by your emotion, because you're going to see a lot of up and down. And don't be greedy. Don't keep adding your money just because you see it keep rising. Make sure you do your own research and analysis, because I'm not a financial advisor. So that's it for today, guys. I hope you can find my video helpful, and make sure you subscribe to my channel and give me a big like. It would help me a lot. Thank you.